So hello students, welcome everyone to this video. And before coming to this video, if you have not yet gone through as to how to operate the software, the LMS, for the purpose of viewing the lectures in the entry test course for enrolled agent, then make sure you go through the lecture 1 video with respect to the guidance and overview. And if you have already gone through that, then this is the right time to start viewing this lecture. So let's start. So basically, if I specifically talk about the entrance test to enrolled agent course, so it has been designed and split into two parts. The part one would be related to the filing requirements, and the part two is just the same. Some, you know, things will be discussed in a very elaborative and detailed manner. Before we proceed further, let me take you through this aspect. After viewing these two lectures, you are supposed to go through some of the multiple choice questions. And if you pass that exam with our aforementioned criteria, then you will be given the entry to our enrolled agent course. So you are supposed to view each and every part of this video with dedication and perseverance. So let's start this video. So now let's start our discussion. So if I specifically talk about the filing requirements, so what are these filing requirements actually are? So let me tell you, basically what happens is in the United States of America, the governing body for handling US taxation norms and compliances is IRS. What's that body? IRS. That means, for let's take an instance this way, in our India, so there is a central board of direct taxes, right, who takes care of everything as to whether the taxation compliances are done in a proper manner or not. Likewise, in United States of America, the concerned body is IRS, Internal Revenue Services, just to check out this thing, all the compliances with respect to the US taxation are properly abide by those residents in the United States of America or those who come in the bracket of paying the taxes as per the norms of IRS, even outside United States of America. So now you must be, astonished and amazed to, listen to this very particular respect. Okay, ma'am, if you have said this thing, someone who is residing in United States of America is supposed to pay the tax and need to comply and abide by the norms of IRS, US taxation. If he's earning money in United States of America, he's supposed to pay the taxes there too over there. But what about the persons who are not in United States of America? So in this very particular lecture, we are going to discuss all the things in a very comprehensive manner, even the persons who are not in United States of America, but they justify the green card test or the substantial present test are supposed to pay the taxes as per the norms of the US taxation as given by the body of IRS, right? So let's start our discussion in this very particular aspect. Filing requirements. Filing requirements in general, if we specifically talk about this, so federal laws, that means the central law of United States of America, right? Of the US central law. It requires US citizens, point number one. So that means who is supposed to file the income tax return in American, right? In United States of America, in America. Who is supposed to file income tax return in US or as per the norms of US taxation, right? So this is what we are going to discuss now as per the norms of US taxation. So the first one is the, as we have discussed here, US citizens. Who? US citizens. And the second one is the resident aliens. So we'll discuss all these concepts one by one so that you won't confront any kind of problems. So first one is the US citizens and second one is the resident aliens. So that means who is supposed to comply with the filing requirements of US taxation. The first one is the person who is a citizen of America and the second one is the resident alien. So now let's start our discussion rather one step further. A US citizen or resident alien of the United States must include all their worldwide income on their tax return. Now, there is another term, worldwide income. What does that mean? Income, that's fine. Whatever you have earned in America, that's your income in America. But what does worldwide income? Worldwide income mean to say whether earned in America or somewhere else. Whether earned in US or outside US. That is your worldwide income. Okay. So what is this worldwide income? So that means whether you have earned income in US, obviously that will be part of your, income in the income tax return of US. But apart from this, even if you have earned any income outside US, it will form part of your total income. So worldwide income means income earned in America and even outside America. That will be your worldwide income. Now let's come back to our provision. So it says a US citizen or resident alien of the United States must include all their worldwide income on their tax returns, subject their worldwide income to taxation under the US tax laws. So that means if you are a citizen of India, point number one. Secondly, even if you are not a US citizen, but you are referred to as a resident alien of America, even then, in both the situations, whether you are a US citizen or you are a resident alien of America, you are supposed to pay tax on your entire income, that is your worldwide income, whether earned in US or outside US. So far we have discussed some of the key aspects. Point number one, in United States of America, the governing body of US taxation filing is IRS, right? And who is supposed to file tax return with the IRS? The one who is a US citizen and even the one who is resident alien. In both the situations, they are supposed to pay their taxes on their entire income, that is worldwide income, whether earned in US or outside US. Subjecting their entire worldwide income to taxation under the US tax laws, if a taxpayer is required to file a US income tax return, their worldwide income is subject to this that we have already discussed, and they are supposed to be reported on Form 1040 or Form 1040 SR. Now let's discuss these forms also. Basically, if I specifically talk about Form 1040, that is an individual income tax return for normal persons who are not yet senior citizens. Individual income tax return form. Individual income tax return form. So what is this SR? You're supposed to have an idea for that also. 1040 SR. So that was individual senior citizen. SR means senior citizen. Individual senior citizen tax return form. Right? Now, let's elaborate our discussion. So if I specifically talk about the non-resident alien, right? So who is that person? Because we discussed US citizen as well as a resident alien of US, they're supposed to file their income tax return with the IRS body of US, right? So who is a non-resident alien? If a person does not meet either the green card test or substantial present test, then the person is classified as non-resident alien, right? So resident alien, we will discuss further. because they are supposed to satisfy either the green card test or 183 days or more, that we will discuss. But before we proceed towards that part, let me have a one more discussion with you. US citizens and those who are resident aliens, they are supposed to pay their taxes on their entire worldwide income and need to file their income tax returns with the IRS. But what about the persons who are not resident aliens? And who those persons actually are, who do not meet the green card test of United States of America, because for procuring the green card of United States of America for permanent residency, for having a green card in America, so you need to comply by the immigration laws over there, or substantial present test that we will discuss shortly. You are supposed to be there in United States of America for specific number of days over there. So if you do not satisfy the green card test, not this one, and even not substantial present test, right? You're not meeting this, you're not meeting this. So in this very particular situation, you will be referred to as or classified as non-resident alien. You must be amazed. Why, ma'am? Why you are telling us this thing? They are supposed to, you are making category of US citizens and resident aliens and non-resident aliens. Why so? Because the non-resident aliens, they are not taxed on their worldwide income. They are supposed to be taxed only the income sources within the US and on certain income connected with their business in the United States of America. Point to be noted. That means for those who are the US citizens or who are the resident aliens of America, they are supposed to pay their taxes on their entire income, that is worldwide income, whether earned in America or outside America. But if we specifically talk about the non-resident alien, they are supposed to pay the taxes only on income which is earned within the US, right? Or apart from this, if they have their business connected with the US, on that very particular income, they are supposed to, who? Non-resident aliens are supposed to pay taxes not on, I repeat, not on worldwide tax income, but only on the income which is earned within the US or from the business which is connected with the US. So far, we have discussed some of the key aspects. Point number one, we have discussed so far. If you are in US, that means whether you are a citizen of US or in other situation, even if you are not a US citizen, you are a resident alien of US, you are supposed to file your income tax return with the IRS. And in that very particular situation, you are supposed to pay taxes on your entire worldwide income, whether you have earned that income within the US or even outside US. But the second category that we just discussed now relates to the non-resident alien, right? So that means a person who has either not satisfied the green card test as per the immigration laws or has not been in US for specific number of days, which is the substantial present test, then that person is non-resident and is not supposed to pay the taxes on entire worldwide income. He's supposed to pay taxes only on the income which is earned in USA. That's it. Or any business within the USA. That means the income which is connected with the United States of America. However, since we earlier discussed, resident aliens, they are generally taxed on their entire worldwide income, just similar to the US citizens. In the very beginning, we discussed this thing. And for this very particular purpose, since they are not US citizens, then but the provisions, they are similar, just like United States of American citizens. Why? Because they are satisfying the green card test or the substantial presence test. Now let's discuss both of these tests one by one. So if we specifically talk about the green card test, right? So a non-resident alien is a lawful permanent resident of US at any time if they have been given the privilege according to the immigration laws of residing permanently as an immigrant. That means you are there in United States of America because of any reason, because you may be, immigrated over there as a student visa, or maybe on work permit, H-1B visa, or maybe because of any reason you are there in United States of America. And after a particular time span, as of now, you are a non-resident alien over there because you're not satisfying either the green card test or the substantial present test. But if at any point of time you are a lawful permanent resident of US, so in that very particular situation, you are referred to as a immigrant over there of US, and this status exists if the Bureau of Citizenship and Immigration Services has issued you a green card. That means initially you were a non-resident, but after complying with the conditions of immigration body of United States of America, you have been allocated and given a green card of US, so you will become a resident alien. In other particular situation, which is the second test, that is substantial presence test, right? So if any person who is as of now a non-resident is classified as resident alien, under which kind of circumstance? That means any person who satisfies this condition, who is there in United States of America for 31 days, 31 days during the current year, right? And 183 days during a 3-year period that includes the current year and 2 years immediately before that, right? So that means in the current year, you are there in United States of America for how many years? For how many days rather? 31 days, right? But this is condition number 1. Along with this condition, you are also supposed, because here is and not or, so that means and means you are supposed to comply with the second condition as well. Both the conditions need to be satisfied, only then the substantial present test will be satisfied, will be given a positive affirmation. So that means if you're there in the current year for 31 days, and for the current year plus your 2 years immediately preceding, so that means current year, previous year, then again previous to previous year. If you're there in United States of America for at least 183 days, that means you are there in the current year for 31 days, and at the same time current year plus 2 previous preceding years, you are there for 183 days. So in that very particular situation, you will be referred to as a resident alien because you have satisfied the substantial present test, right? So that means either of the two tests, either the green card test you are satisfying or the substantial present test you are satisfying, you will be referred to as a resident alien. And if you're a resident of US, you are supposed to pay tax on your entire worldwide income, whether it is earned in United States of America or even outside US, right? So the point to be noted, right? And all the compliances with respect to the same, which needs to be filing requirements with the IRS. What is IRS? That's the governing body of United States of America for US taxation, Internal Revenue Services. You are supposed to file your income tax return with the concerned governing body. So we have covered the concept related to the substantial present test, green card test and all. Now let's proceed further with respect to this. Let's take an example. Let me give you an example. Let's add a sheet over here. Okay. Let's take an example this way. For example, if we are evaluating and computing the filing requirements for a year, let's say 2023, right? As to whether the person is a resident or a non-resident, right? Let's take example number 1. For example, if a person is there in current year for, let's say, 30 days, That is 2023. If you're calculating for 2023, for 2022 and 2021, is there, let's say, 100 days and 83 days. So now, person is a resident or a non-resident. See, condition number one was to see to it as to whether in the current year, that is 2023 in the given case, the person is there for at least 31 days or not, right? This is the condition. See, we discussed here. Let me show you that also, 31 days, right? So is this condition satisfied? So the answer is no. So do we need to check the other condition of, current year plus 2 previous years? No, because both the conditions need to be satisfied, both, right? Let's take, so he is a non-resident alien. Why? Because he is not in the current year for at least 31 days. So he is a non-resident, right? Now let's take one more example. Example number 2. Suppose in the current year, let's say 2023, which is referred to as the current year, he is there for 31 days. And for the previous year, 2022 and 2021, let's say he's here for 100 days and he's here for, let's take an instance this way. He's there for, 80 days, right? Altogether, you're supposed to add, first of all, condition number 1, he's there for in the current year for 31 days. Yes. Now it becomes mandatory to check condition number 2, because what we discussed, he's there in the current year for 31 days and mean to say second condition also needs to be satisfied. So the second condition is current year plus 2 previous year, more than 183 days, right? At least 183 days, 183 days or more, right? So he's there for more than 183 days, right? More than 183 days. So in this very particular situation, if we calculate, if we add all these days, so it's more than 183 days. So he's a resident alien, right? But let's change the example a little bit. Let's say in this example only, let's say the second example to this one, or rather the third main example, he is there in the current year for 2023 for 31 days. Is the condition number 1 satisfied? Yes, condition number 1 gets satisfied. Okay. So do we need to check condition number 2? Yes, because condition number 1 is satisfied. If here it would have been less than 31 days, then straight away non-resident. But here, since condition number 1 is satisfied, he is there for at least 31 days. So now the condition number 2 needs to be satisfied. Let's take 2022, 2021. He's here for 80 days, right? And he's here for 20 days. So if we add current year plus 2 previous year, 131 days, that means less than 183 days. So is this a person a resident or a non-resident? Straight away, non-resident alien. So if a person is a non-resident, so he's supposed to pay tax on his only on income earned in the United States of America, not on worldwide income, but only on the income which is earned in the US or the business connected within the US, right? So the point to be taken into consideration is that if condition number 1, what was that condition number 1? If he is there in the United States of America in the current year for 31 days at least, condition number 1 satisfied, only then condition number 2. Condition number 2 is what? Current year plus 2 previous year. Stay. He's there in United States of America for more than 183 days. If this condition is also satisfied, after the condition number 1 is satisfied, only then he will be a resident. Otherwise, non-resident. So if condition number 1 is not satisfied, you're not supposed to check the condition number 2, right? And vice versa. So that means both the conditions need to be satisfied for a person to be referred to as a resident alien. And if he is a resident alien, he's supposed to pay tax on his entire worldwide income. So this is what we discussed so far. Let's proceed further now. A non-US citizen typically denied a social security number. So what is this SSN? That is for the purpose of, claiming certain social security benefits, let's say health benefits and all. So person who is a United States of American citizen, he is given a social security number. But what about the person who is not a US citizen? So is not given a personal, this SSN, social security number. So in that very particular situation, any individual who is required to have a US taxpayer identification but not eligible for SSN, he obtains an individual taxpayer identification number. Okay, are you a US citizen? If the answer is yes, okay, you will be having your SSN with you and you can file your income tax return with that SSN and all that and for further compliances and all. But if you are not a US citizen, you don't have an SSN, social security number, but you are supposed to, you are a US taxpayer anyhow, maybe you are a resident alien, right? So in that very particular situation, you are supposed to file for ITIN. What is this ITIN? Individual taxpayer identification number. So simple rule. Are you a US citizen? That means you're having your SSN and you can file your return accordingly with that number. But if you're not a US citizen, let's say you are a resident alien or maybe a non-resident alien, so you are supposed to obtain an ITIN, individual taxpayer identification number, which is supposed to be there with the IRS body when you are meeting your filing requirements. So basically, why this individual taxpayer identification number is used to comply with the US tax laws, because when you are filing your income tax return, it should have a unique, tax ID. That means, for example, if we are in India, we have our PAN card number, right? Likewise, in United States of America, if you are a US citizen, if you're not having SSN, right, because you're not a US citizen, so you need to obtain an individual taxpayer identification number. And let me tell you, these are issued to both resident as well as non-resident aliens. The key difference is only that residents are supposed to pay tax on their entire income, whether earned in US or not, on their entire worldwide income. And non-residents are supposed to pay income tax only on the income which is earned in US or business connected with the US, not on worldwide income. But the common thing is that you are not a US citizen, but you are either a resident or a non-resident alien. So you are not having SSN, social security number. So you are supposed to obtain an ITIN, individual taxpayer identification number. Why? To comply with the US tax laws and to file your income tax return with the IRS body. So basically, the social security number, it's a unique identifier issued by the Social Security Administration. So that means if you need to work in the US, you need to obtain this. You are actually having an SSN with you, and it is used to determine your eligibility for, any kind of, benefits which are given by the government or you are in government service. So that's why SSS is required. And apart from this, for health insurance, for medical benefits, for old age, for unemployment, for disability, or any kind of, job guarantee, food security. So government supports you if you're a US citizen. So that means this social security number is for US citizens. Let's proceed further now. Form 1040, it is for individual income tax return filing, those who are not senior citizens, and those who are senior citizens and are individuals also, form 1040 SR is used. So everyone can file form 1040. Only taxpayers who are age 65 or older, so that means those who are senior citizens, they are given an option to file form 1040 SR. So any taxpayer with a straightforward tax situation can file either of these two forms without the number schedules, schedule 1 through 3. So that means if you're an individual, you can file your income tax return and the schedules need not be, as such numbered. This is schedule 1, schedule 2, schedule 3. So basically they support your return. So they are not compulsory, right? But in addition to schedule 1 to 3, form 1040 or 1040 SR for senior citizens, they have also an additional schedules. So these schedules are used with these forms, whether 1040 for individual or 1040 SR for individual senior citizen. They need to be completed, right, as needed to complete more complex tax returns. So that means without the numbered schedule 1 to 3, you are supposed to fill certain schedules which are attached with the forms to complete your return. Now, here our, another discussion starts, which is, related to the preliminary work to prepare tax returns, right? So let's discuss that. Why certain preliminary work is required before you actually file your tax returns? Why is it so? So let me tell you. Use of the prior year returns for comparisons. That means if you are filing your tax return for 2023, why the tax return details for 2022? They are important for you. Just to make comparison. Comparison? Why certain comparison and why is it required? Just to prevent any gross mathematical errors. That means for accuracy, it is important if you're filing your current income tax return, you are supposed to refer the previous income tax return also, just to ensure accuracy and to prevent any mathematical errors. And at the same time, to identify any significant changes. That means to ensure accuracy, and if there has been any substantial change, for example, substantial change, you sold your property, right? So that's a kind of substantial change. You're supposed to pay taxes and all that on that also. So previous year income tax return serves as a base to identify any major changes to ensure accuracy so that current year tax return can be filed properly. If the comparison shows that there were no significant changes and you make that comparison current year return with the previous year, there are no major changes, so that means the amount of tax liability or the refund, if any, so the similar amounts will be there. But let's say the comparison of the prior year returns helps apart from this to identify the non-common items. Which items? Non-common items. For example, as I told you just couple of minutes ago, you sold your principal residence, you sold your property, or you're eligible for retirement pay, or maybe for any kind of deduction or taxes and all that. So it's really very important to compare your previous year income tax returns with the current one for accuracy and for any kind of changes. For two things majorly, for accuracy and to ensure any kind of major changes. Now, let's proceed further. Apart from this, apart from the accuracy and apart from any major changes, even to check previous IRS correspondences, what that does mean. IRS, Internal Revenue Services, the US taxation governing body, right? That means if you received any notice or any letter from the IRS, so it will provide an insight, a base, a look into as to what further course of action needs to be followed in the current income tax return. For example, if you received any letter or any notice from the income tax department in the last year, so what kind of impact it will have in the current year? So that means that correspondence is equally important, right? While finding the income tax return for the current year. So a taxpayer's previous year correspondence for any notice and all is likely to provide an insight to issues still affecting a current return, right? And it should be reviewed to ensure, among other things, compliance with the prior audits, adjustments, or judgments. So that means if any kind of certain kind of modifications are required or any kind of changes, adjustments, and audits, prior audits give you an additional information as to what kind of impact it will have in the current year. So previous notices or letters from the IRS, if they are having any impact on the current year return. So that's why they are really very important to be referred to, right? Apart from this, why previous year returns are important, why this preliminary work related to the previous year returns is important, because lifestyle change. Now you must be amazed and astonished at the same time. Why lifestyle? What is the importance of lifestyle change in income tax return filing? Let me tell you, there are separate limits and deductions. If you, let's say, if you're an individual, separate deduction is there. If you are a married person, so you can, by filing joint return, by husband and wife, if they file their joint return, they can claim more deduction in United States of America. And if you are divorced, the things are separate. If you have, adopted a child, so under the household status, you are given certain more deduction and all that. And if you have retired, you have purchased a new home, or you have been declared as bankrupt, so in all these certain situations, your computation of tax will be different, because the deductions, the limits, they change with every lifestyle change. Whether you are married, the situation is different, the limits are different, the deductions, they do vary. That's why it is equally important to first of all analyze whether you are a married person, because if you are married, you can file your tax return with your wife jointly and claim more deductions there too. If you are an individual, different deduction. If you are a head of the household status, you can claim certain other beneficial deduction and all that. So that's why it is really very important to analyze the personal lifestyle changes also, because they have an impact on your tax computation. Because ultimately, whatever tax you pay is depend on what? It is depend on, in a nutshell, whatever your income is, whatever deductions you are given and all that, whatever credits are there and all that, by deducting all, your tax liability gets calculated. And accordingly, if you file your return, income tax return with the IRS. So for this income and deductions and credits and all that, it's really very important to check whether your lifestyle has changed or not. So that means whether you are an individual, whether you are married, whether you have adopted a child, then head of the household status and all that. So that's why these things, they are really very important. Wage income. So either spouse starts working or stops working or procures a second job. So accordingly, your benefits vary and the computation of tax will be different. So that's why you need to have an idea for the same. Apart from this, change in the amount of taxable income not subject to withholding, right? So your dividends, for example, if you have invested in shares in a particular company, what kind of dividends you have? Capital gains if you sold your property, self-employment income if you are carrying out your business operations as well, or any kind of distribution by the governing body. So if there has been any kind of change in the amount of taxable income which is not subject to withholding tax, so you are supposed to have an every detail just for the proper calculation of tax, right? Apart from this, change in the amount of adjustments to income, for example, if the IRA deduction has been changed, or the if you have procured a student loan and the interest reduction, any kind of change in that, or alimony, if you have filed a divorce, then alimony expensive, any, right? So you're supposed to check all these details. For example, in the previous year you were married, in the current year you are divorced, you are paying alimony or you're receiving alimony, accordingly your tax computation will vary, right? So that's why these kind of details, they are equally important. Then change in the amount of itemized deductions or the tax credits, for example, what kind of medical expenses you have for the purpose of eligible deduction, taxes, interest expense, charity, educational credit, child tax credit, because these credits, they, lower your taxable income, right? So that's why we need all these details, and that's why they are also referred to as or named as preliminary work related to the previous year returns or other kind of changes. And if I specifically talk about the personal information, so taxpayer personal information, for example, is date of birth, age, marital status, dependency, I give you an instance also why these are important, because why age is important. Let's take an example this way. Because if you are a senior citizen, you are eligible for more deduction. Accordingly, tax computation will vary. If you are not a senior citizen, deductions limits, they are different. So that's why age is an important criteria. Date of birth, on which the age is dependent, your marital status, because if you're married, if you're filing your joint return, you can claim more deduction, and all that. If you have dependents, then you can claim head of the household status, and you can claim more deduction that we will discuss in our, main parts of enroll agent, right? So this is how these things they actually go. Because married filing jointly, there are more deductions for that. And how can you procure all this information? From state issued photo ID, you can have all this information. It's a good source of obtaining personal information as well. Apart from this, now let's discuss special filing requirements. If I specifically talk about that, if a taxpayer is a US citizen or a resident alien, so that means he's supposed to pay his tax on entire worldwide income, whether earned in US or outside US, right? So the rules of filing income, estate income, gift tax returns, and for paying estimated tax, they are generally the same, whether he's in the United States of America or abroad. Because which rule applies? Worldwide tax income rule applies. Generally, non-resident aliens are only taxed on US source income. But if you are not a non-resident, if you're not a resident, but rather you are a non-resident, so you're supposed to pay taxes only on income which is earned in United States of America or any business connected within the US, and not you're not supposed to pay. You being a non-resident are not supposed to pay tax on an entire worldwide income, but only on income connected with the US, right? But now this is an important thing. Exception is there, right? Let's take an instance way. For example, this is Nick Jonas. Let's take, let's add some, example. This is Priyanka Chopra, right? Now, Priyanka Chopra is there in United States of America, and Nick Jonas is already a US citizen. Now, Priyanka Chopra, although let's take an instance there, she does not satisfy as of now. Let's take an example. We are taking an example. She is not a green card holder as of now. She is not meeting, substantial present test. What was substantial present test? We just discussed 31 days stay in the previous year and 183 days stay at least, right, in the current year plus 2 previous years. So if you're satisfying both these conditions, so you will be a resident. But let's say take an instance this way. She's a non-resident. She is not satisfying the green card test. She is not satisfying the substantial present test. So she is a non-resident. She's supposed to pay only on the income, which is, let's say she's doing some shows or maybe some web series in United States of America, or carrying any kind of business in America. So Priyanka Chopra has to pay the income tax only on the income earned in the US. But Nick says, her husband, let's file income tax return jointly because we'll get some more deductions, right? Because for as an individual, the limit is less, but if both of them file their income tax return jointly with the IRS body, so the deduction will be more. So in that very particular situation, she's a non-resident as of now. But if Priyanka Chopra, in the given case, non-resident, chooses to be treated as US resident, why she has chosen to become a US resident, but she's not a US resident. Why? To claim jointly filed return benefits, right? So in this very particular situation, in order to file a joint return, so entire worldwide tax income, even the income which is earned in India by Priyanka Chopra, would be subject to tax in America. Why? Because she has elected herself, suo moto, on her own, to be a US resident for the purpose of filing joint income tax return. See, as far as the double taxation avoidance agreements are concerned, the relief and all, we are not talking about the, bilateral, agreements between the two countries and all that. But let me give you a brief amount of idea about that. There are certain, double taxation avoidance, DTAA, double taxation avoidance agreements between various countries. For example, if you're earning your income in, India, and same income, you satisfied the test of, substantial present test of USA, and the same income is, subject to tax in India as well as US. So is there any kind of, tax treaty with the help of which a person can be given any relief or so? So it will be given through these double taxation avoidance agreements as per the provisions which is there with the between the two countries. Let's say in India and US. If India and US signs an agreement, okay, your person in Indian who is earning income in India and USA and worldwide income is taxable, we will provide this kind of relief. And same India is saying, okay, if any, US citizen, if he's earning income in India and is subject to tax in India as well, so the US says, okay, we will provide this relief to that person. So this is kind of thing which is referred to as double taxation avoidance agreement. Just to give you a brief understanding, we're not talking about the entry cases of double taxation avoidance agreements, because your question would have been why then, just to claim the benefit and all, she's not earning income in, US, but certain income, not the entire, but still subject to worldwide income tax. So there are some relief measures over there, but as of now our emphasis is that a non-resident alien is not subject to worldwide tax income, is only supposed to pay tax on the income which is earned in the US or business connected with the US. But if she gets married in United States of America and is filing, he or she gets married in United States of America and is filing joint return, so in that very particular situation, so what is the benefit to file a joint return? To claim more deductions for more limits. So in that very particular situation, if she elects to be a US resident, so in that situation, he or she is supposed to pay tax in spite of the fact he or she is a non-resident of United States of America, is supposed to pay tax on worldwide income. Why? Because they are filing joint return. Joint return. So what is the crux? Crux is this: even if you are a non-resident, you are given an option to be treated as resident. In which situation? For example, in filing joint return. So normal, simple thing. If you are a non-resident, you are supposed to pay tax only on your income earned in the US. But if you elect to be a resident, then automatically your worldwide income would be subject to tax, right? Whether earned in US or not. So in that very particular situation, you are supposed to pay tax since you have elected to become a resident by filing joint return with your spouse. So you are supposed to pay tax on worldwide income because now you are a resident and not a non-resident. That's why. That's an important thing. Now, let's proceed further. So, items affecting future returns, right? Certain items from the prior year may be needed to complete the current year return. For example, in any kind of income tax refund in the previous year, or any kind of carry forward gain or loss. Because if you carry forward any kind of losses, then it affects your current income tax computation. For example, if you have earned certain business income, but you're supposed to set off your, current business income with the previous year loss, so your, tax computation and income will vary. For example, let's take an instance where current year you have business income. Last year there was business loss, so you can set off your, as per the provisions, certain amount of, income can be set off with the losses, and accordingly your business income will vary, it will reduce, and accordingly the tax computation will less. This is just one of the instance. So why we are emphasizing on this very particular aspect as to the items of the past year, prior year returns, they serve as the base for the current year or the future year tax return for, certain kind of calculations which are directly connected with the income and tax computation. There is one more form, that is your form number 8801. Form 8801. Because if you're an individual, estate, or trust, to figure the minimum tax credit, if any, for alternate minimum tax you are incurred in prior year tax return to figure any carried forward to 2023. So that means if you are carry forward any kind of what? credits from the previous year. You're supposed to file this form 8801. Okay. Doesn't matter you are an individual, you are an estate, you are a trust. If you are claiming any kind of tax credit from the previous year, you are supposed to file this form 8801. Why this form is important? Because at the time of current year filing, the authorities as well as the taxpayer, or maybe a representative of the taxpayer, for example, CP or AA, will get the entire information from this form 8801 for the purpose of tax credits, which can be claimed in the current year, that is 2023. So this was, your certain concepts related to the preliminary work to prepare tax returns. That's all for now for this part 1, and part 2 will be covered in the next lecture. So thank you very much. Just keep smiling, keep doing hard work, and the results will definitely come. Just focus on the process and outcome will be positive for sure, but just keep doing hard work. Thank you very much.